Good morning and welcome back to Almus Market Mornings. Global bond yields cooled off after the spike seen up in the past few days. Now, I'm not exactly sure why this happened, but it coincided with President Trump's statement saying that the deal with Iran is in its final stages. We saw oil prices fall 3 to 4% and the yields correct a bit. Domestically, rupee weakened initially towards 96.97 before the central bank stepped in. RBI has also announced a $5 billion 3-year buy-sell swap to manage liquidity. Let's understand this from JK. Morning, sir. So this buy-sell swap which RBI is doing, do you think it's building up the firepower for an intervention?
Running Swaraj. So this, I think, is probably having a few objectives. One which I can see is that RBI has a large forward short book, and within that there are some maturities in the short term within 1 to 3 months, and I presume some of them are maturing in the month of May, which is our short position, RBI short position, and this buy sell swap would actually push that forward short maturity to far forward maturity. That's one possibility. Other possibility is that since they have been selling dollars of late to stop the rupee from falling sharply, the liquidity has been sucked out, and the buy action would once again lead to liquidity infusion. So that is one more possibility, and of course, any surplus dollars that they would get from this operation would also help them to intervene more if the rupee tries to cross 97, or become a very one-sided or disorderly move. So that these are multiple purposes with which RBI might be doing this. Nothing more than this should be read, actually. Now, if you look at the global scenario which you talked about, yesterday's moves in the markets was, of course, initially driven by what Trump said, that they are very close to, ending the war. But at the same time, he also said that, there can be further strikes in case a deal is not there. But this alone was not sufficient. The market also looked at the statement by IRGC, who said that 25 vessels, including oil tankers, container ships, and commercial ships, had transited safely over previous 24 hours in coordination with Iranian authorities. So some sort of supply enhancement happened. So that's another relief for the market, probably to tide over the supply chain issue that we have been following. So while it's not a materially de-escalating situation, the headlines have helped correct the very large moves in the market recently seen in all the segments, like yields and the oil price, as well as in the dollar and stocks as well. Yeah, but I think what we can see also is that many of the importing nations like South Korea, Japan, Taiwan, China are all using up their reserves, and these may not last too far. So unless there is a real, relief through opening of the Strait of Hormuz, this supply chain issue is going to crop up once again, and is going to put stress on the markets. And also, experts also opine that even if this Hormuz Strait is open today, to have normal supply resume, it will take a long time. So it's the markets might have slightly jumped the gun, or maybe I think just stretch the correction a bit too far, whereby the yields fell by 10 basis points and the oil fell by about 6%. And even the dollar, which had found resistance to go above 159 in dollar yen and below 1.16 in the euro, found some sort of a short covering in those currencies, but nothing beyond that. If you look at stock market, they also had a good rally yesterday. But again, if you look at the US stock market and few other Asian markets as well, if you look at them, they are driven by the AI sector rally, and they have been quite skewed. It's only the new age stocks that have been leading the rally, and they were for quite some time. Even after the war has ended, war has continued for more than 2.5 months. This rally had been ongoing. Uh, of late, the rise up in the yields pulled them down for 2 days, but I think again, there is the positive view on this sector continues, and that is actually keeping the markets again on a strong footing. Yesterday, of course, Dow also rallied because of the yields going up. But what is also important to note is that in the FOMC minutes yesterday, most of the members were hawkish, and majority of them wanted some sort of a policy forming if the inflation continues about 2%. And they even preferred that they should remove the language from the post-meeting statement suggesting the easing bias. If you remember last meeting, the easing bias had been continued in the minutes, sorry, rather the statements. But Powell also indicated that it would just take one more meeting to see that this bias might change actually. Interestingly, even Trump acknowledged in an interview with the Fortune magazine that he may need to wait until the war on Iran concludes before rate cuts become feasible. So that's a very different statement from what we have heard from Trump as always. And this is also coming at a time when Kevin Walsh is taking over, and he's not taking over at a time when it is easier to become dovish. So Trump's statement perhaps helps Kevin Walsh to settle down and watch how things evolve over the coming periods as well. So I think once again, to reiterate, whatever moves we saw yesterday were all driven by need for a correction to the sharp moves that we had seen. Of course, some headlines which also led market to see the correction. Dollar still remains on the stronger side, above 99 in the dollar index. And dollar and hovers near 119 also. In Asia side, all the markets, of course, they closed in on the lowest levels in the respective currencies, but then they also retreated. Particularly, what we saw was in Indonesia, they surprised the markets with a 50 basis points policy rate hike, which was not expected. And this move came amid sustained pressure on the local currency, which had weakened to 17,700, which is almost all-time high. And the central bank itself stated that it was also to stabilize the currency that they had taken this move. So every central bank, particularly the EM central banks, are becoming a bit more touchy about the currencies which are falling one way. In India, of course, no such central bank or official statement was seen. But what was significant was that the rupees 1 year forward outright rate was trading above 100, a magical mark of 100. So it's a forward rate, it's not the spot rate. So the spot rate was around 96.80, and the premium was 3 rupees 30 paisa, which means that forward 1 year rate was coming at 100.25, 100.30, which for some hedgers, long-term hedgers, it would have been proved very attractive. And also many times, I wouldn't say this is going to happen now, but many times such levels do attract some long-term sellers, and perhaps pauses the USD INR rally. But we'll still wait and see. But good thing about the Indian side is that the stocks have stopped falling, and every day that it sees a sell-off based on global market fall, it recovers also sharply. So perhaps there is some sort of a interest even in the FIs whose selling in the Indian stocks have slowed down considerably, and that could be possible behind it, but we'll know in the days to come. Rupee, again, to reiterate, it's not out of the woods. The falling trend has not changed. Perhaps it may be a point where it could take some pause. Thank you.
Thank you, JK. And yes, so both statements from Trump and IRGC sort of helped markets correct a few large moves that have been happening recently, especially in terms of oil and yields. Both have sort of come off. But remember, these are only headline moves. Till the time the Hormuz Strait does not open on a durable basis, it would keep impacting import nations. Just look at Indonesia, which is having a very weak currency. They did a 50 basis point rate hike just to curb the depreciation. So EM central banks have started taking action against weakness in currencies, and this is a trend to sort of look out for. Otherwise, rupee continued its weakness, maybe because of the positive sentiment. We may see some a stronger bias today, but otherwise we are not out of the woods, as JK mentioned. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.